Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here on July 14th, bringing some commentary here in the energy market. So let's get started. Really kind of a quiet start here to the session here, and so far in the afternoon it's been fairly quiet. Currently off about 25 cents. That's the September oil contract here, trading just a nickel over $100 a barrel. It's been a little bit of below, been a little bit of above, but kind of right in here. Brent is off as well, but only off about 3 cents at around 107.23. Taking a look at the nat gas, that's off about 1 to 2 cents. Complex bucking the trend a little bit. Heats up about a quarter of a cent, and the RBOB is up about 3/4 of a cent there. So slightly positive tone there. And, taking a look at the news, yes, we have equities. They seem to be a little bit firmer here today. But, I think a lot of crude right now is really kind of centering around this $100 barrel area, which is very psychological in nature. It generally tends to be that way. So we've kind of been resting right on here. We did push down through the 50-day moving average. I've spoke about that in several prior posts here. There was an initial area that we were kind of targeting. And of course, the market hit that. And Friday was kind of a big down day there, as we certainly saw the bears grab a hold of the market and saw some long liquidation coming into play there. Now, looking at some of the news here, in Libya, we saw a couple of fields there come back online. Over in Iraq, where the government there is certainly kind of struggling back and forth, but we did see reports anyways that the Kurds gained control of a couple of oil fields that the Sunnis had control of. So the market's kind of viewing that as a somewhat of a positive, hence the reason for putting a little bit of pressure on oil prices. I think also here it's certainly worth mentioning and noting. It's something I've talked about in a lot of these posts, and that's the EIA data last week. I mean, really, basically, when you look at that, you dig kind of deeper into that. What it's telling me is that we're really seeing, lackluster demand here in the U.S. And we did see the EIA actually revise downward their daily anticipated demand by about 180,000 barrels. So certainly, I think, when you look at the supply side, which again, total stocks in crude are still running on the higher side, near record amounts at this point. Demand kind of questionable. To me, I think obviously suggests that we could see lower prices. Couple that with, I think, fear premium coming out of the market because of the geopolitical stuff going on, and in Libya, certainly in Iraq, and then of course we have to look at what's happening in Gaza there, and there's a lot of tensions there, but nonetheless, we didn't hear too much about it over the weekend. So I think kind of traders taking a little bit of a sigh of relief there. Hence the reason why price is under just a little bit of pressure, but. Again, $100 a barrel here, psychological area. Short-term technical indicators are suggesting to me that the market is actually now in oversold territory. So we got to really watch for tomorrow's API data, and then of course watch for Wednesday's EIA data. That could potentially set the market for a small rebound up. So that's kind of what I'm looking for right now. If you're not short in the market right now, I think you'd be cautious, the possibility of taking one at these levels. But give me a call if you're interested in hearing some ideas. I do have some ideas on how you could play this here, both to the long side and to the short side, depending on what side of the camp you might fall into. Of course, my number there is on the screen, as well as my email address. Futures and options on futures may involve substantial risk and may not be suitable for all investors.